lot of folks will do one thing nationwide or one thing everywhere. We do almost everything in one place, and we very rarely leave the state of Texas. With one exception, we did buy a hospital out in Sacramento, not too far from you, but that was just a screaming hot deal. For the most part, we don't leave our network, because real estate, especially private real estate, is frankly, it's as good as your execution ability and your ability to get financing, but it's really based on your network, because you don't buy anything on market. Everything that we buy is off market. Well, how do you find a deal off market? Your network. So we've never, and one of our things we're proud of, Roger, is we've never not closed a deal we went after. And the brokerage community knows that. And so if you have a commercial real estate broker that's got a deal that's kind of falling apart, they're not going to make any money, right? They need that to trade to make money. And so a lot of those folks will bring it to us off market, say, hey, I bet I can get my client to agree to this because I know that you'll close. And so I won't even market it. I'll save some money there, and they'll save some money there. And sometimes it's not a home run, but you could get it 5% lower than you would have otherwise. And when you're dealing with a $60 million asset, that's a fair amount of money. We bought some stuff we bought some student housing out of bankruptcy coming out of COVID. That was a neat one. There's a lot of different ways, but it's really your network. And so if our network is here and we know the economics of here, we should stay here. That's how we look at it.
Got it. Are you within Texas, are you concentrated by design in a handful of markets, or are you pretty much open regardless of where it is in the state, including, let's say, secondary or tertiary markets that you deem, growth markets or worthy for any number of different reasons?
For the most part, we're open. Now, that being said, the majority of our work has been in the Dallas, Fort Worth, and Houston markets. We've done some work in the Austin, San Antonio markets. Austin is incredibly expensive right now. It's hard to make things pencil. It's become almost exclusively institutional. But the outer rim of Austin is a very prosperous area to do business in. We've got a couple deals cooking out there. So we call it the Texas Triangle, Roger. I don't know if you ever looked on a map, but it's the highway system. If you come Dallas down to Houston, Houston over to San Antonio goes back up through Austin to Fort Worth and Dallas. So they call it the Texas Triangle. That's where about 80% of the state's GDP, population, business community resides. And then you've got a couple outliers like the West Texas oil areas or the coast. So for the most part, everything's in that triangle.
Okay, and you said Austin's kind of gotten, has gotten uber expensive, so it's a lot of institutional money there. How does that compare, in your view, to San Antonio then?
Night and day. Night and day. It's amazing. Now, San Antonio, the northern suburbs. So we have a deal where we're going to build some ground up multifamily in a town called New Braunfels. Most may not have heard of it, but it's in between Austin and San Antonio on the freeway there. And it's become a suburb of San Antonio, but you can actually get to the Austin airport in 30 minutes. And so the outlying areas have become incredibly popular with all the tech companies that have moved there. Most people don't know this, but most of them have moved to the outer lying areas. They're not in downtown. Downtown is the University of Texas, a couple of the companies, but primarily they're condos, large condo towers. A lot of these companies are in the outlying areas. And that's where you can get some really good deals, because what's happening is the in-migration to the state is 10 years strong. And then we had a break in building because of COVID. So we had 2 years of underbuilding, but the in-migration has increased more so than ever. And so we don't have enough housing. So you asked, are we switching to multifamily? Are we doing stuff? We've actually switched to ground up multifamily just because of the macroeconomic issue that we're seeing in the state, where we just have such a demand for housing that we may not even catch up for 6-7 years.
Interesting. So you guys have switched to, I don't want to say exclusively, because that kind of backs you into a corner with the question, which I don't want to do. But I guess, so I'll ask it this way. So the focus is pretty much ground up based on the economics. And again, I'm sure if an amazing deal came your way with an existing project, you take it. But that's the focus then, is ground up at this point.
It is for a couple of reasons. Once I mentioned the macro issue, right? There's so many people here. There's no housing. Single families is ground to a halt because of financing, and that's happened nationwide. We still have it here. We haven't really had the drop in prices, but they've kind of leveled off as far as single family is concerned. But we've raised rents 8 times this year across our portfolio of multifamily. Now, the level of rent increases will probably, calm down and flatten out, but it's still a very healthy level. So we're absolutely seeing that. And from the financing perspective, if you know anything about construction lending, even though rates are up, you don't pay the max amount on your loan until you've pulled the entire loan, because you do it in draws. So you do it in pieces, right? And so let's say you have a $20 million construction loan. You're not going to pull that full 20 until the very end of the project. And so it's a ramping up of that payment, if you will. And we're convinced that the Fed is going to have to lower rates in about 9 to 12 months from now. And so if we're right, by the time we're getting our most expensive pulls on our construction loans, rates will be coming back in the south direction, which will balance all of that out, because we'll do a floating rate loan on that. And so the construction cost the added cost to build is almost nothing based on the margins. You can still make a considerable return on construction today.